Government's annual outlook for Medicare spelling good news for retirees. And here with the details is Yahoo Finance's very own senior columnist, Rick Newman. Rick.
Hey guys, what I found interesting about this, which is the headline saying Medicare, what they call the so-called go broke date for Medicare last year, it was 2031, and now it's 2036. It has been extended by 5 years. And let's go back 2 years. 2 years ago, the Medicare trustees said they thought the main trust fund in Medicare could run out of money as early as 2028. If it happened in 2028, that means the next president, who we're going to elect this year, would be having to deal with this problem during his or her next presidential term. And now that is not the case. So for President Biden running for re-election, I think this means two things. Number one, he has taken some steps to reduce healthcare costs. And so he can now say, hey, look, it's working. The cost basis in Medicare has gone down and we've extended the life of that program. That's not really why the picture looks a little bit better for Medicare, but he can say it, and he already is saying it. And the second thing is the next president is not going to have to deal with this problem. The next president should deal with the problem. We should get Medicare's finances straightened out sooner rather than later, but that's not the way Washington works. So there's going to be a lot of talk about this, but the next president actually is not going to have to do something on an urgent basis.
Rick, what are some of the main reasons why things aren't worse? And are there any levers that can be pulled by the next incoming president to help keep that going?
Yeah, so it's two things mainly that improve the outlook for Medicare. The first is that the economy is just doing well, and Americans don't believe it. I mean, we saw new confidence readings today that said Americans think the economy is in bad shape, but it's not. And government tax revenues went up by more than expected because the economy grew by more than expected. People are earning money and paying more taxes. So that's number one. The other one people aren't going to believe either, which is that the rate of price increases in healthcare have actually moderated relative to economist expectations from just a couple of years ago. Biden didn't really accomplish either one of those things. I mean, this is the force of the economy on its own. There have been some government efforts going back to the Affordable Care Act in 2010 that have intended to lower the growth rate of healthcare. And, for years, healthcare was growing at 2 or 3 rates times the rate of inflation, and that is not the case anymore. That doesn't mean the system is in good shape or it's working for everybody. It's clearly not. But at least one thing is going in the right direction. There's an important footnote here, guys, which is Social Security, which is the other focus of this annual report. That is going to start running short of money in 2033, so 9 years from now. And that is the same as last year's forecast. So that's actually going to become a problem first based on the latest data.
Rick, let me get your take on something. I saw Jason Trennert, chairman of Strategas, all-around smart guy. He posted the following on X today, Rick, saying the New York Times, the Wall Street Journal, and now the FT have all now written articles suggesting that people are too stupid to realize that inflation is not as bad as what they see with their own eyes. Goes on to say, as an election issue, the inflation debate is over and President Biden lost. Now, as a columnist, Rick, you think a lot about these issues very deeply. What's your response to Mr. Trennert's argument there?
I loved your curveball questions, Josh, I got to say. I've been writing a lot about this, too. People think inflation is worse than the data says it is. So there's a gap between perception and reality. I don't think that means anybody is stupid. Because as I've discovered in conversations with a lot of our audience members, every individual has his or her own personal inflation gauge. And it's not the CPI. It's not some of the data we talk about all the time. It could be a lot of different things. For a lot of people, it's rent. What's the rent? Is it up or down? And how much of a bite is it taking out of their paycheck? I have talked with people who told me that because the price of a pound of roast beef is $3 more than it was in 2020, they know that inflation is high. Somebody told me it's the cost of a loaf of Pepperidge Farm rye bread. I mean, this is just how people measure inflation in their heads. And of course, the big one is gasoline prices. People relate to that because it's just a price they see all the time. And everybody has in their head an idea of what the right price for these things is. And the prices now are higher than the right price that people think. So I have a lot of arguments with people. I don't think people are stupid. And I think that the one thing we all have to keep in mind is that a lot of those prices have gone up and stayed up. So the rate of inflation could be zero on a year-over-year basis, but the rate of inflation on a 3-year basis or a 4-year basis in many cases is 25% or more. So if prices were to come down, I think that would help with this perception issue, but not too many prices are coming down, and some prices are just going to stay up there for a good long while.
Yeah, not too many prices coming down. I think in my brain it's eggs, even though I know eggs are even more volatile than anything else. But it's just always the same carton. So maybe.
Hey, I follow the price of avocados. You know, when you can get an avocado for $1.50, things are good.
That changes
and when it's
seasonally,
$2 or $3,
though.
I get upset.
Yeah, the avocado is very seasonal.
Avocado metric.
Yeah. Maybe we need to get to film a little thing in a grocery store together, Rick. Thanks so much. Appreciate it. Have a good
Bye,
weekend.
guys. Happy weekend.